We're joined now by Cowen's John Blackledge. He raised his price target to $165, maintains an outperform rating. John, good to see you. What thread there would you pull on first to say that either the story has changed or we got confirmation of some improvement in Amazon?
Big one was the AWS revenue beat. So they came in at 12% top line growth. We had 9.5%. And I think the buy side was right around there. So they beat there. But the bigger part of it was management said that AWS revenue stabilized during the quarter, that cost optimizations subsided, and customers are moving new workloads to the cloud. So they're going to start to lap these cost optimizations in 3Q. They started 3Q last year. So we raised the AWS forecast. We now think AWS revenue troughed in 2Q. I think everyone thought it would trough in 3Q. So we expect accelerating AWS revenue in 3Q, 4Q, and then into 2024. So that was a really big one. That was probably the biggest thing going into it. And then management was also very bullish and constructive around their Gen AI strategy and also just the customer pipeline.
Customer pipeline in AWS, I assume. And then what about on the retail side of the business? Seems like the focus is on some cost discipline and kind of reaping the benefits of recent investments and regionalization of delivery.
Yeah, they crushed the margin, right? And that was led by the AWS beat and advertising beat. But the math that we do is say they crushed. They did $7.7 billion in 2Q. You back out AWS operating income, back out advertising at a 40% margin, and the rest of the biz, which is a proxy for the retail business, e-commerce business, was a negative $2 billion. Last year it was negative $6 billion on the same math. So it got a lot better. Why? You had the headcount cuts. You had inflationary pressure subsiding, supply chain, energy costs, FX drag subsiding, and then just generally other cost initiatives. But one of the biggest unlocks that really stamped this big beat and is really positive going forward is, like you mentioned, the fulfillment. So they went to a regional fulfillment model, 8 regions in the U.S. versus prior national network. And they delivered, I think it was 76% of units within region. And this was the first quarter, 2Q. 76% of units delivered in region, much higher than the prior year. So we have that now on comp for the next 3 quarters. So there's a lot of really positive things driving the margins. But this is definitely a big one, going to the regional fulfillment.
Just to dig into that piece of the puzzle a little bit further, I mean, how much of this strength in e-commerce is Amazon specific versus maybe indicative of a broader trend we're seeing, especially when you think about eBay earnings or Wayfair, where we saw numbers and a stock response that was much stronger than expected?
Yeah, they said they on the consumer side they are seeing positive macro indicators, number one, but I would say it's also Amazon specific. Remember, they called out fastest delivery speeds ever, right? They delivered 1.8 billion units same day or next day, and thus far in 23. That was 4 times versus 2019. Over 50% of units delivered to Prime members were same day or next day. And they said importantly, and we've talked about this for many years, that the shipping speed drives much higher conversion rates. And what are they doing? They're going to step on the gas, and they're going to double same-day delivery stations in the coming year. So shipping speeds are only going to get faster. So I would just say the consumer is better, but the shipping speeds at this scale are really powerful for Amazon.